Process. At the AGM.
It's. Sorry, it's only 10:58. I was given misdirection. I encourage you to get some date squares.
They're amazing.
Actually,
They are really
terrible. Nobody should have them. I had two. Double check for everyone, just to make sure.
It's already on the sugar rush. All right, sorry. So just hold one more minute just to make sure everyone can come in. Who needs to come in? The rest on Zoom. Yeah. Oh no, it's on setting it 5G. It's never full. It should be full.
I don't really know.
Oh, I see. There was coconut in that.
No.
Really? It tasted coconut.
Oh, coconut oil. Very good. Very good. Yes. I didn't have enough butter. So
Because I think I'm going, well, it's a beach burn.
Who knew? Cookies with jeans.
Well, yeah, they have enough butter, so you can knock her out. This by using. Okay, we're now at 11 o'clock. You're now at 11 o'clock. So we're going to call the meeting to order. I don't have the powerful microphone to do that anymore. So the first item is a roll call. So have you done that? And we have a quorum? Yeah. Okay, we have a quorum. Are there any declarations of interest? So seeing none, of course you can declare during the meeting if something comes up. We will now go on to the adoption of the agenda. So resolved that the agenda for the April 4, 2025 Finance and Administration Advisory Committee meeting be adopted as presented. I need someone to move. Great, so it's G, and someone to second is Jeff Atkinson. Any comments on the agenda? All in favor? Votes. All right, looks like the motion is carried to adopt the agenda. We now move on to the minutes of our March 3rd Finance and Admin Committee meeting, and we have a resolution. Resolved that the minutes of the Finance and Administration Advisory Committee meeting held March 3rd, 2025 be received and approved as printed. So I need someone to move. So I see Mary Lou moves. I see Richard seconds. Are any comments on the minutes? All right, all in favor? All right, the approval of the minutes is carried. So now we move on to the financial statements. I guess that would be from 2024. And there will be a presentation by our auditor. Is there an introduction by anyone before they begin the presentation?
I will introduce myself.
Yeah,
Sure. Okay. Let me. And share. There we go. Okay. So hi everyone. I am Donna Rotar, audit partner at Baker Tilly REO here at Carlson Place. So we are your auditors for this year. I have with me Adriana Martin. She's our senior auditor, and so she did the bulk of the work for us. So I'm just here to present. She was mostly the face of the audit. She worked with Stacy to get the audit done. So she's here with me today. So just there we go. Oh, got it.
You need to share. I think it's not being seen by Alan. Can you click on share at the bottom?
Oh, I don't have a share at the bottom. I did.
Oh, it should be. Somebody
Alex.
I think it's being shared, isn't it?
Well, I'm still. Alan, can you see the presentation on your screen?
Yes, I can.
Okay, great. Thank you.
Perfect. Thank you. Oh, sorry, I went too far. So I just wanted to go over quickly what our role is as auditors, the approach we take to auditing these financial statements. So our role is to express an opinion on the financial statements as to whether they are fairly presented in all material respects in accordance with public sector accounting standards. So public sector accounting standards are a specific set of accounting standards for public sector entities. And so we take the financial statements that Stacy and her team prepare, and we ensure that they're not materially misstated. So we follow Canadian auditing standards to do this. We do not obtain absolute assurance. We obtain reasonable assurance when we do an audit. That's the way the standards are designed. So we assess risks to determine the focus areas of the audit. This is done based on our understanding of the entity, the industry, customer and supplier relationships, as well as our assessment of the control environment and an analysis of the preliminary financial information. So we look for variances, we look for the control processes that Stacey and her team follow, those types of things in assessing our risks. And then in doing the audit itself, we use a combination of analytical procedures, looking at those variances, diving into them, ratio analysis, those types of things, tested details, and then a little bit of work on controls. In this case, we didn't fully rely on controls. We primarily just relied on the controls at the payroll organizations that are used by the organization. So our focus areas in the audit this year, where we kind of identified risks, were the asset retirement obligation, which is a new standard that was implemented last year, and we'll discuss that a little bit later in my presentation. Correct allocation of revenue, just making sure that the revenues are allocated to the appropriate project. And then so we also look at a risk around expenses and payroll. And the reason we look at that is because when there's an organization that is funded by the government, we see an inherent bias to make sure you're spending those funds, to make sure you keep getting that money, and to potentially, misallocate funds to ensure that you're maximizing that funding. So we do spend more effort looking at those expenses and payroll. So materiality, so when I say we don't provide absolute assurance, it ties into the fact that we use a materiality assessment when doing our audit. So, change the page, sorry guys. So basically, materiality is an estimate of what would be a threshold that the users would kind of really see a difference in the financial statements. So we use our professional judgment determining this amount, taking into consideration the users, the sensitivity of the users of those financial statements, as well as some of the risks. So we set materiality at 95,000, and that was based on a percentage of expenses. So this is consistent with the methodology that was used in previous years by previous auditors. You can interrupt me if you have questions at any time. I'm open to that for sure. Oh, that is hard to do, isn't it? So you do, I think you have these in front of you, right? Okay.
Just call out what page you're on.
Yeah, so we're on the statement of financial position. So on the financial statements, I think that's page 5, Adriana. Page 5 of the financial statements. Right. So the statement of financial position is a snapshot of the assets, liabilities, and surplus of the organization at a point in time. So in this case, at December 31st, 2024. So we start with the financial assets. So these are generally cash and assets that are expected to kind of turn into cash in the next 12 months for the most part. And then we take financial liabilities. So these are liabilities that will at some point in the future require a cash outlay. And that gives us a measure called net financial debt. So net financial debt is an indication, so this indicates net financial debt, there is more debt than there are financial assets in the organization. So then in the bottom section, you see non-financial assets, prepaids, intangible assets, and then tangible capital assets. And so those total, I can't quite watch, $8 million. So those are then added to net financial debt to give you your accumulated surplus. So the accumulated surplus is the total of all past surpluses and deficits over the years. It's accumulation of that. And I'll show you it on a further slide. So it effectively reflects the net economic resources available to the organization.
Split up here.
The accumulated surplus?
Yeah.
Yeah, so basically, so I'll go back, there is another slide where it kind of calculates net surplus or accumulated surplus for you. So basically, like if you think of a for-profit corporation, you think of retained earnings. So it's basically the accumulation of all your net income over the years since the entity started. It's your equity, is what it is. Yes.
If you were going bankrupt, it's the net value, residual value of the corporation.
Theoretically,
So you subtract all your debts, you subtract all,
Yeah.
you know, your liabilities, and then you kind of put that against what cash you have in the bank, and that's your assets, the values, then you net it all out. And if you're going to the creditors, like, you know, Hudson Bay Company, this is what your actual corporate value is.
Yeah.
Is your accumulated surplus.
yeah, so in a for-profit corporation, we would.
Is that
we would-
correct?
Yeah, we would
Okay.
equate that to roughly what the value of the corporation is. It's kind of all the accumulation of assets and income over the years. Now, keeping
So
in
it's the
mind,
assets, it's not the income, because the income could be gone. So, I just don't, I don't remember hearing this.
You use the income over the years to buy some of those assets, but,
yeah,
so they have value. Like you bought your house, you have debt against it, but it has value.
This isn't an income statement, it's a financial position statement, it's like a
Yeah.
balance sheet, except for I guess for a nonprofit. Right, so a balance sheet is really the statement of assets and liabilities.
Yeah.
It doesn't tell you about, we're gonna get to the income statement.
Yeah.
No, I understand, but
Yeah, okay.
it's just throw income over since things started, doesn't make sense. What our assets are worth. It's what it is.
effectively,
Okay,
on the books, keeping in mind that some of those assets we're amortizing, so they're actually probably worth more. So that's the only kind of thing I would say to what you said, Sally, was, you know, sometimes the fair market value of those assets is worth more. Does that help?
Yep.
Thank you, everyone. So now this is the income statement, which we call the statement of operations and accumulated surplus. You'll see the surplus here again. So basically, we break down revenue by categories. We've got the municipal levies by the different categories, and then other revenue, government grants, and supplemental programs and donations. Turn to many pages. Then we break down expenses kind of by project or program category area, which is the surplus before capital activities. So the surplus before capital activities is that 110,000. And then we show the capital activities. So the capital activities are income and spending specifically related to capital assets. So you'll see the municipal portion of the capital portion of the municipal levy there. And then amortization, that's a non-cash item. That's your accounting depreciation of those assets. And then also the interest you pay on your long-term debt. So that gets you to an accumulated surplus of 324,000. So that's added to the opening surplus of 7 million from the beginning of the year, which is the end of last year and last year's audited statements, to get us to that same 7.5 million of accumulated surplus at the end of the year. So this statement over the years is the accumulation of that surplus over the years. So this statement is a statement of changes in net debt. So the net debt was on that balance sheet. It was the financial assets less the financial liabilities. So this reconciles the surplus to the change in net financial debt. So effectively what it does is it adjusts for the changes in capital items. So your acquisition of tangible assets, your increase in intangibles, and your changes. So it reconciles that change in net debt from the beginning to the end of the year. So then the next statement is the statement of cash flows. So this really shows you where the cash came from and where the cash has been spent. I like to call this my favorite statement because it really shows you where your money's coming from and where your money's going. So basically at the top we have operating activities. So your cash from operating activities, which is those core programs that you're running. Cash in from that was $569,000. Then you spent $657 on capital items, so purchasing tangibles, intangibles, and building towards intangibles and tangibles. You spent $175,000 repaying debt, and then you invested $414 in short-term investments. So the total decrease in cash was $678,000. Your cash started at $964, and now it's down to $286 at the end of the year. I'm just gonna take some water quick. Any questions on the cash flow? No. Okay, so we did, in doing our audit, we did find a couple errors, misstatements that we did not adjust for. And so we're required to report these to you. So there, I know it's hard to see, there are two key things. Do they have this in the package? Susan?
I believe it's page 11 of the financial statement. Or no?
It would be, it would have been
No,
with the
it's
letters,
not.
it's in with the letters, yes.
Actually, I think it was in the auditor's. It might be in the actual auditor's letter. Oh, there it is. Okay, so it's appended to, in your package, it's under item 3. And it's page. Oh, you have a. Oh, sorry, through it on 60. Yep, up page.
Yeah, I know,
Sorry. So it is page 52 of the agenda package.
Thank you, sorry, I didn't have the full package, so. There's two key areas. There's two key areas of misstatement. So one is accrued interest on the loan. So the loan payment, the last loan payment in the year is December 1st. So there's 30 days of interest on the loans that need to be accrued under accounting policies. This has historically never been done. So we did not do it this year. And so basically it wasn't done last year, it wasn't done this year. The offset is completely trivial to our audit. So we just recorded it and moved on. It doesn't add value. And the budget is operating on a cash basis. So it makes more work for safety to report it that way, really. So we left it as an unadjusted error. The other two things that we found were there were two assets purchased by the foundation in 2023 that weren't reported until 2024. So they are now recorded in the books and being amortized properly. However, they should have technically been in last year. So we've just noted that here. And the adjustment has already been made in 2024, so no need to go back. Yes.
Could you tell us what the loan was for and what the assets were?
Yeah. The loan is the head office. It's the head office loan. Yeah.
Okay,
Yeah, it's a head office loan, and then the two assets are the Osprey platform and the Eco Tracker app.
thank you.
You're welcome. So any questions on that concept of an unadjusted misstatement, or is that everyone's okay with that? Perfect. Thank you. So our conclusion. So this is where we're going to come back to the asset retirement obligation. So the asset retirement obligation was a standard that was put into the public sector accounting standards for 2023. So in 2023, Stacy made an estimate of what it would cost to remediate the asbestos that may or may not exist in some of the properties owned by the organization. So in our perspective, Stacy unfortunately is not an expert on asbestos. We are not experts on asbestos, and so we weren't comfortable to say that that number is correct. So we have qualified our audit opinion just due to that. So, or due to that one specific area. So we are issuing a clean audit opinion with the exception of just that one number on the financial statements, which is $61,933 on those financials right now. Now, it is a common qualification. If you look at most of the provinces across Canada, the qualification is in all of their statements because it is too hard to determine all the buildings that may potentially have asbestos and what that cost may be. Now, in the case of your organization, I think that asset pool is limited, and so I believe it's in Space's plan to do an assessment of that, have an expert come in, and then we will be able to rely on that expert and ensure that that number is correct. So I don't expect this qualification to be there next year. Yes.
Was there time or availability to do it correctly instead of putting the onus on Space? Or was it, were we working under time constraints, why we just did it as an assumption?
Would you like to address that or do you have another question?
No, I'll address that. So last year, this was, I would say, a last minute surprise to us during the audit process. So Scott, who has responsibility over our facilities, consulted with some folks and we made an educated estimate of, first of all, which buildings are likely affected and what the cost to remediate would be. But it is in the 2025 budget and we're planning to do a proper materials, hazardous materials assessment of our facilities.
Because it was a surprise, it was the timing of a surprise and that's why. Okay, fair enough.
So,
And, sorry, and then I was just gonna say, knowing that the plan was for 2025 to do it,
Right.
it's a time intensive thing to do, so, but, you know, we started the audit end of January, beginning of, there wasn't enough time. So, and I mean, it doesn't really impact the financial statements, other than it's important to know that number may or may not be right.
And how you ran it off for advertising.
Exactly, so we actually chose not to do anything with it this year, we just held it steady, and we'll address it next year.
so are we hiring a consultant to do this?
Yes.
So that's all the stuff that to do.
I know, we're in the same boat, that's why I.
There's no way around it.
Yeah, Mary Lou.
Good, very good to do the audit with having that that way.
Mary Lou.
Yes, I was gonna say, you did.
Sorry, Mary Lou.
It's okay, it's okay. Oh, and once this is done, and we have to report, it simply becomes a reasonable figure which will be carried from year to year and won't become an issue of misstatement.
Yeah, exactly.
Paul?
Or the likelihood merely is you have a mitigation plan. And you have a little bit of an easier and it's gone. It comes down to, we're so far down in the use of asbestos and it doesn't make any sense, because you're looking for caulking and windows.
Yeah, yeah.
It used to be your roof panel and it's fluttering down, now we're at the point of use.
Is this primarily an asbestos issue or are there other issues?
So there could also be lead pipes, lead paint.
Paint.
Yeah,
So,
yeah, there's a host of things.
Okay. All right.
Anything that's this building is no problem. Shouldn't be.
It's totally shady.
It shouldn't be. I said, probably won't.
be very surprised.
The lighting. So we have to change that.
So,
The lighting, the fluorescent lighting. It had,
Okay.
so it was old system lighting. So, yeah.
I don't know if a consultant would bring that up.
A good one, but you should know to check.
Anyway, I mean, we haven't scoped or attended the project yet, so.
But the bottom line, this is just an accounting thing. You don't have to do that. Or that, any, this is the Community Accounting Association putting this in as part of an audit. And it's one way you have to do it, but it doesn't mean you have to do it.
You don't have to do any remediation works, but I think the point you're making is that we need to have an accurate understanding of the level of risk and potential cost.
Council liability, presumably?
Yes.
Yeah.
What word do we have?
Okay,
So then my last slide is just what are the next steps? What does that look like? So at the AGM, we will finalize our report, we will date it that day. We will need to obtain a signed management rep letter, which is just a letter from Stacy saying I gave you everything you needed. All the estimates are reasonable, you know, that kind of stuff. And then we will need to obtain evidence of approval by the board, because we do that at AGM. Then the last thing we do is we do what's called a subsequent events review. So we need to confirm that there's been nothing significant that has happened between December 31st and the day of our AGM, day of approval. So the building didn't burn down. There was no massive lawsuit that's going to cost you millions of dollars. Those types of things that we would potentially disclose in the financial statements. We just need to confirm none of those things. If anything comes up, we'll obviously advise the board, but other than that, we expect to issue that, no problems, at the AGM. And that's it, unless there's any questions.
Great, are there any more questions before we do the resolution? I have just one.
Yeah.
This is really just my own and it's really my own curiosity. And I did mention the fact that, the first statement is really kind of a balance sheet, but it doesn't balance the way I'm used to seeing balance sheets balance. And so why is that? Is that something special for nonprofits?
It's something special for public sector entities. This concept of net financial debt
Right,
and the concept of accumulated surplus. Yeah.
okay.
It's just a completely different set of financial statements designed, so it's the same one that municipalities use those types of things. It's just a different concept for a more non-profit type government budget.
And so is it used for nonprofits too, or just for?
No,
government?
nonprofits have their own special set of financial statements.
Right.
Yeah.
Okay, thank you.
You're welcome.
So I have a couple of questions because you know, right, financial stuff. Is this being presented at the AGM? Okay. So if this is being presented at the AGM, it's now been to the financial committee. So there's a great number of portions of people here.
Yes,
Please modify your slides so they don't include tables that people can't read.
absolutely.
Okay, and then I don't think tables are overly helpful at all.
Okay.
At that level, if you just want to put the information into line stuff, then we can understand it at a very, very high level. Are we going broke? Are we making enough money to cover things? Are we having a surplus? That sort of thing. Because, yeah. The state be running away with the money or something, whatever, that sort of thing. Instead of tables, then quite frankly, they're.
I mean, those are the actual financial statements, so you do need to see those, which is why I presented them, and you do have in your package to read, but like I am required to show you those statements.
Okay, fair enough. Make them big. Okay.
That's as big as they get on those slides, unfortunately, but.
Yeah, one of my biggest beefs, as some people know, I kind of had a run in the PPM a few years ago on this bringing stuff to the board. It's just not reasonable to present to the board. The other thing is like I asked, if you're going to say what assets are and stuff like that, you say, well, this asset cost your fund, cost the asset plus.
Sure, I
But
wasn't
we
sure.
need to know
Yeah.
that because telling me it's an asset doesn't mean anything to me until you say,
Yeah.
it's a half-ton truck.
Yeah.
And then you go, oh, okay, half-ton truck, I have.
Yeah.
I don't understand.
Yeah, no, my apologies, I thought you had had it on package ahead of time and had read it already, that was my understanding.
We
So-
do have the package ahead of time, but it's that thick, and most of our counselors that have packages this thick to go through on a weekly basis anyways, plus phone calls and stuff.
Absolutely.
And quite frankly, just assume it's not gonna be gone through, okay?
Perfect, that was my understanding.
That's Sally.
Do people think it would be helpful if I just made sure that everybody in the room had a printout of just those particular sheets so they could have the right?
Just the tables would be great, stuff like
Yeah, so
that would
that's
be
what
fun.
we're
If you wanna
doing.
refer to a table, make sure the ones that you're gonna have.
Yeah, and they
Here.
were all in your packages, and I think I
Yeah,
gave you.
because I tried to do it on here, which is where I do all my work, and I'm going, okay, then we have to read this.
No, you wouldn't be able to rewrite it.
So I'll make sure that for the ones that are on the slides, that everybody at the table next week.
Okay.
We has that printout.
Perfect.
And remember, one step higher level than what this group is. Okay?
I actually think she had it pitched at the right level.
It was good,
Okay.
good for this group.
Yeah.
It's-
So I think,
When I see a couple of tables that I can't read, I just go back to that KPMG
but
nightmare.
the board has the obligation to actually to be approving the financial statements. And I think the level that which you presented was, I think, a very good level. And I think also that some of your summaries of what the numbers meant was very
Very
good. So I wouldn't take it another level up. I honestly, because I think there is an obligation that the board has to actually look.
And that's why I
And that's
put
what
the
she
statements
said.
in there, yeah.
Absolutely.
They do have an obligation to look at them, and my job is to make sure you have it, so that's why I have them on the slide. It's unfortunate that you can't read them, but I made them as good as I could, so it's not like you need them bigger, right? So,
No, and I think Sally's idea to actually have the
Yeah.
paper so that they can look at that. Also, turned around and looked here because for those of us in the back, I can't see those.
Yeah.
Right, so I turned around, plus I had this, but the only other comment that I would make is that, I don't know if is the auditor allowed to make a comment about the health of the going concern? Because, if you look at the auditor's letter, because that's the first thing I turn to, when you're looking at the statements, and I read the auditor's letter, which actually tries to summarize what they looked at, the risks and the
Yeah.
issues, right?
Yeah.
And so there is in that auditor's letter, and so it occurred to me that, is it worth having a slide just quickly summarizing, maybe
Yeah.
some of those slides already did actually, but, just summarizing what that auditor's letter says, because that then alleviates the concern of the board that there weren't any, issues.
Yeah.
That, Stacy's buying stickers bars or something. But I know I'm saying, I hear what you're saying, but I just wonder how much the auditor is allowed to actually state.
Right, so I mean, I have an obligation to tell you what we did,
Right.
what materiality we used.
Right.
What our processes were. These are these statements that you are approving. You need to see those statements that you're approving. These are the misstatements we didn't adjust. And this is our overall conclusion.
Right.
Those are the key things that I'm obligated by my standards to do, which is why I'm saying it. So,
Good presentation.
thank you.
Okay, Mary Lou and then Sally.
Okay, just one question for clarity, because we did get this back on. Whether everybody in the room looked at it is not really relevant, because we got the package in. The expectation is that it would have been ordered. Where the committee, the finance committee, if we approve this package.
Yeah.
Then is it legitimate to provide a synopsis such as Paul suggested to the board itself? Given the fact that once that everybody on the board gets the full package in advance of the.
Yeah, so I'll talk to Stacy and Sally, but I think what I could do potentially instead of the tables is the high level, this is the total financial assets, this is the total financial liabilities. Maybe we could work on a presentation for that, but I'm happy to work on that with Stacy and Sally and whatever they think is best.
Richard.
Yeah. I don't know if I want to take on that risk. So you're saying this committee,
No,
I know it's a question, but I don't think, I think where Paul's shots were that we don't want to be any more complicated. This wasn't too bad. No, this wasn't too bad at all. I think Sally's thing of having the things that we talked about, even though they're sent out, the second package, darker and clear, and so people can follow along. But if there is something ever happened, or that we don't want anybody around this table when the full board is here saying, well, the finance committee told me it was all right. We want them to be in the same boat as we are.
and that's why I asked the question in the first place.
Right. No, I just,
That's why I asked this question.
yeah.
At what level is the requirement of everyone who has done this? At what level?
Well, it's the board's responsibility.
Our resolution will say though, that we recommend that the board approve it. I'm just letting you know, that's the same resolution that we have read and approved.
But the board has to
every year.
accept that.
But the board has to ultimately accept it.
Yeah, I've sat through a lot of audits, and this wasn't too bad of a presentation whatsoever.
Thank you, I'm gonna take that.
There's nobody in the board that I feel sorry for that shouldn't have to sit through the same thing.
Yeah, okay, Sally has a comment.
It's a question comment. Is it standard practice to present the letter first and then the statements, or is there etiquette around this or protocols? Because I'm just wondering, start with the punchline.
Sure, yeah.
Which would be the letter, and we could maybe adjust the agenda.
Yeah, I was actually thinking,
Sure.
I was thinking that because I go to the letter first.
Yeah, absolutely.
So I think the first time at the board meeting to have the letter first, you can tell them the
Yeah.
punchline and then get into the statement.
Sure,
I guess the
absolutely.
only question is, we do have them as separate motions because the next motion regarding the letter says that the board of directors receive and authorize signing of your auditor's report.
Okay,
So I don't know whether you would feel comfortable as board members signing off of the auditor's report until you've actually seen the statement. I think that's the reason why the
Well,
board has always.
but
been-
that's okay, you could still have the letter, and then you do the statement, and then you approve the statement, and then you approve the letter, I mean, I don't see why.
It's just
Yeah.
one presentation.
Yeah, it's just a presentation. Yeah,
Yes.
because I always look at what the auditor has to say, anytime I come from the corporate world, I always go look at
Yeah.
the auditor, what the auditor says.
What did they
is there
say?
any
Yeah.
problems here? And then
Yeah.
I look for those problems, and then, yeah. And
So just so I'm clear then, we'll reorder them to have the auditor's report first. But
Yeah.
There will be it'll simply be received. And then once you've reviewed the financial statements in the next item, then the motion will be a compound one. You'll
Yes.
Approve the financial statements and.
Yes.
So that's great.
I think that went through.
Thank you,
well.
everyone.
Thank you.
All right, are there any more comments or questions before I read the resolution? All right, good conversation. Resolved that the Finance and Administration Advisory Committee receive and recommend that the Board of Directors approve the 2024 audited financial statements and direct that they be posted and distributed in accordance with Section 38 of the Conservation Authorities Act. So I need someone to move. So I see Mary Lou moves, see Paul Kehoe seconds. All in favor? All in favor, yes, and I see Alan's hand. All right, motion's carried, very good. So now we have the auditor's report being presented.
oh, good. I already did, I thought.
Oh, okay, so
Yeah.
It was kind of combined.
you did combine it.
Yeah, I did combine.
Yes, you did, all right. So everyone, I'm gonna read the resolution and we'll have more final comments. And resolve that the Finance and Administration Advisory Committee recommend that the Board of Directors receive and authorize signing of the auditor's report. I need someone to move. So I see Jeff Atkinson moves, I see Jean Kelso seconds. Are there any more final comments on the auditor's report? All in favor? All right, motion's carried. And thank you very much.
Welcome.
And this is as your first year of auditors, and I do think you explained it that's the clearest explanation I've ever had.
Thank you. I was a little bit encouraged by Stacy and Sally. But I deal with a lot of smaller boards who really have no financial background, so I really try and, but anyway, thank you.
Personally, I'm an engineer, I love spreadsheets, so I just love those tables. That's just me, what can I say?
As an engineering technologist, we hated the move.
I love spreadsheets. All right, we're on to our hopefully final topic, which is the financial update year-to-date 2024 audited by Stacy. And this is just for information.
Yes. Presentation. My goal was just, I presented the year end in March, but it wasn't audited at that point in time. So this is just an update on what the changes were post audit and post the board recommendation regarding the reserves. So there was two key financial impact things that were found during the audit was the City of Ottawa floodplain mapping contract revenue of about $100K, having been set up as a receivable. So that was added. And part of that was we haven't gotten the PO from the City of Ottawa. And we still don't have it, we're chasing that to invoice them fully.
You're chasing it?
Yes. And then additionally, WSIB at end of February, beginning of March, announced that in 2023, they have a surplus and they're giving us money back. So we're getting about $45,000 back. Actually got the check last week, so that's in the bank. So we put that into the audit because it wasn't part of it. So that was additional revenue of 145 from what had been reported the last round, which impacts reserves. We use less again. And additionally, on the capital side, she mentioned the Osprey Tower and Eco Tracker. Those were things that the foundation had paid for in previous years, but they should have been MVCA assets. So they've now been set up as assets and MVCA separate. And on the dam, Kashwakimak, that got moved to being a work in progress. So all of the work until the dam is operational will be in a work in progress, and we won't start amortization until after that. And as we have been doing it historically the other way, as we did it, it was being amortized. On the, so the recommendations out of the audit and that we're working on is the condition assessment. Those were already in the capital plan, and hopefully we have enough set aside. We're bit of a guess of what we get from the contractor. We have gotten a list, and that'll hopefully be going out as an RFP soonish to get that done, and implementing a second level of approval on payroll. So those are a couple of the audit recommendations, and those are already in play for this year. So the next slide. Then the next slide, and in the report is the updated reserve balances. So we used less of some reserves, and we took in play the recommendation to put any excess surplus into the water control structure. So the only, again, so that's really the only significant change. For the water control structure in the last report that you had about estimated balance of 478. With the moving the excess surplus there, it's actually now up to 916,000. So it's gone from that being only 19% of the target up to 47%. So big jump there on the water control. If anyone has any questions? Or I missed anything?
Just so you know, between the audit being completed and this report going out, this Stacy's report hasn't been updated. This one.
Yeah,
That's right.
One that goes to the
So,
board.
yes, when this gets updated to the board, it's slightly different numbers.
Can I make a recommendation though, because, sorry, not so much on the reserve balance one, but you know, what you have on the operating budget and the capital budget. So you have it against, budget and then the audited actuals. Is it worth showing the column for what it was that we saw in March? Like, what are the changes from March in terms, because I don't know what the impact is on the change from before. So if you could add that column to those, the operating budget and capital budget, because we may, we're gonna see that probably it's not a huge impact, and it just makes people feel better.
Yeah, it should just be that really the key is those 200K
Yes.
and 45.
Yes, but it just helps people
Where-
understand,
absolutely.
again, make it easy for us, right? So there you go. All right, any comments or questions on the report? Yes, Mary Liz?
Just a comment, I appreciate Stacy's clear little report. I understand the problem on the table and showing the change. But I appreciate getting small changes explained as they go along, so it doesn't become part of this huge wave of financial figures. Okay.
That's, and part of the thing I've changed with my quarterly updating is what are we projecting is going to change? Because you do the budget once, but then things come up through the year and will change. So I do always try and report now that we're partway through, we're looking at the projected change for the next. So.
Thank you. All right, so if there aren't any comments or questions, we actually are moving to adjournment. Resolved that the finance and administration advisory.
Oh, I do have one thing I
yeah.
have to say. So this committee is the financial committee club, you already know that. So Janet has indicated that she wants to she's staying on the financial committee, but she may not wish to be chair. Okay, so she would still be there to back somebody up.
I wish Ed could do that.
I'm wondering about that myself.
Can I just say what I actually said?
What? Yes, you can. It's far better than me trying to say it.
Actually, I don't know if we should be doing this as part of the meeting. I guess we could. Basically, I said, I've done this for 2 years, and I finished my job as chair and then vice chair of the board, and then I've done this for 2 years and I've been willing to continue. I had hoped that Roy would take over because we were grooming Roy, but it would seem that he was poached by our current chair to the new chair. So.
Nobody knows, it's a secret.
But I, you know,
We haven't told Roy.
but I do want to say that if you need me to continue in this position, I
We
will.
will.
But I
Yes.
also think that it really would be a good idea next year, which will be my final year on the board. We really need someone to step up and chair this committee who is an elected representative. I mean, I've done it now for 2 years, right? I mean, I'm at this point the only non-elected representative on this board. It used to be 3, right, in the city of Ottawa. So, anyway, I think somebody should step up, but in any case, I will
Okay.
do it again, but I need a new vice chair, or we will need a new vice chair.
Here's the problem with that. We don't know whether we're gonna be reelected next year.
No, I understand, but I mean, basically, you will be serving another year now, so I
Yes.
need a vice chair, because Roy will not be vice chair for 2025, right? So basically, you're still elected for the next year and a bit, right?
I
So-
nominate Richard.
But I need a vice chair.
You're very well informed. You've got
Second.
Yeah, okay, all I'm saying is you don't have to answer today, and
No,
as
no.
Sally says, the next meeting of the Finance and Admin Committee, whatever that is, you will have to elect a chair and a vice chair, and but if you're interested or you'd like to nominate somebody, that's fine by me, so please let me know. All right? All right, is that covered, Paul?
That's perfect. And that's where I was going wrong, because I was thinking I might have to be the duty, and then I realized I'm just totally inadequate when it comes to financial stuff. Based on looking at my bank account.
Okay, with that.
No, I do all the banking.
Oh.
My wife's an accountant.
I
for
call
Richard.
this meeting to order. All right, resolved that the Finance and Administration Advisory Committee meeting be adjourned. I need someone to move, so Paul Keough moves, Mary Lou seconds, all in favor? Richard, yes, okay, great, and the motion is carried, we are now adjourned. Now, you have to engage in merriment with the volume.
I did. I don't.
That's done by.